Bitcoin continues to be very volatile this week, going up and down, somehow ending up at similar prices in the 80 and $90,000 range, but definitely a lot of volatility both ways. And a lot of people right now are wondering what's going to be happening in the near-term future. There's the Trump tariffs coming down the line. The whole market is getting very nervous about that, right? The Federal Reserve is now being priced in, is having three rate cuts this year, which means probably a lot of pain in the short term, a lot of money printing in the long term. But I think of this video, the most useful use of time is to instead zoom out and talk about how potentially this kind of volatility, where we're looking at $8,000, $10,000 days for Bitcoin, is going to be dwarfed by the future. In the future, there will probably be days with the $100,000, $200,000 daily candles, right? 5 years ago was March of 2020. We all remember March of 2020. That was lockdowns. That was when the world was changing. Bitcoin fell about 50%, 60% or so in a couple days from $8,900, March 7th of 2020, all the way down to, I believe, what, $3,900 or so. It's not zooming in for me, but the point is that that was almost exactly 5 years ago. And imagine telling someone 5 years ago that, hey, guess what? Bitcoin 5 years from now in March of 2025 is going to go up or down $10,000 3 days in a row, and people are going to be freaking out, saying that it's over, the cycle's over, that it's going to crash again, blah, 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 whatever. In 5 years from now, the whole thing could be totally different, and we could be looking at something way, way higher than present. Now, of course, we have to be realistic with our expectations. Bitcoin, I believe, is going to $1 million, but I don't think it's going there this year, but it totally could. And I think one of the best arguments as to why it could is this chart right here by one of my friends, Jesse Myers. Jesse Myers is a wonderful Bitcoin bull and a Bitcoin article writer and Twitter poster and master. And this is a really good chart he put out that I think makes a lot of sense. This is the price of Bitcoin adjusted for gold, priced in terms of gold, right? Everything is priced in terms of something else, right? We could price Bitcoin in terms of Venezuelan bolivars, but that wouldn't make a lot of sense because the exponential rate of decay for the bolivar is way more dramatic than the annual real terms growth for Bitcoin. And I think to a much smaller degree, we can say kind of a similar thing with the dollar, that the dollar is a more flawed measuring stick for valuing the rest of the world than gold. And so even though gold is a much smaller asset class than the dollar, maybe there's an argument to say that the real price of Bitcoin is not in terms of dollars or bolivars or pesos, but in terms of gold. And if we price Bitcoin in terms of gold, what we see very clearly is that the last 2.5 years, we have been slowly grinding back up to where the all-time highs were back 4 years ago in early and mid 2021 into 2022, right? As Jesse Myers says, in gold terms, this entire bull market has just been getting to the prior all-time high. One failed breakout, which happened in the last couple of months here with Bitcoin being over $100,000, $105,000 or so. And this chart suggests that Bitcoin could break out for good by mid-year, right? This is something that is really interesting, especially when you zoom out on the price chart for Bitcoin in terms of gold. Is that if you look back here in 2018 and 2019, Bitcoin oscillated in this range, 2018, 2019, 2020, and then all of a sudden in 2021, it just skyrocketed above the previous channel, and now we've created a new channel since then, right? It makes a lot of sense. The low in late 2022 is basically retesting the highs of this previous channel. And maybe that's an argument to say that the next low and the next bear market is about at this $100,000 level, if not more. Because what's important to keep in mind is that the top of this channel over here, when priced in gold, was $60,000 to $70,000 US. Whereas the channel over here, now we're at $80,000, $90,000, $100,000, right? So maybe in the similar way that we tested the bottom of this channel with the previous cycle, maybe we test it again in the next bear market, but maybe by then we printed twice as many dollars, and the next bear market low is $150,000 or $200,000, right? This is why I strongly encourage you not to talk about trading your Bitcoin cycle to cycle. Am I being a little short-term minded by looking at this specific chart here of only a couple of years? Yes, absolutely. In the long term, Bitcoin's going to tens of millions of dollars. And this is a bit of a short-term message here, not nearly as short-term as most people thinking in literally days or weeks. But the larger point in making here is that you still shouldn't trade your Bitcoin, because even if you successfully time the cycle right, because you're holding dollars waiting for the re-entry, the dollars are depreciating, right? If you waited and you sold the top of the previous cycle and you're only buying back in right now, you're hurting a bit, right? And likewise, there's no guarantee that even if there's another bear market coming, that the next cycle in nominal terms is as low as it is right now, right? But I want to zoom out here to a bit of a longer term discussion here and look at the big picture of where are we in the real picture, right? Bitcoin obviously is very small. It's still barely a multi-trillion-dollar asset, actually not quite technically there. And gold is a much larger asset class, right? Gold is 15, 16, 18 trillion dollars or so, give or take, depending on the week you're looking at. And Bitcoin is way down here, right? Bitcoin is way smaller than gold. But guess what? Gold also is way smaller than what it should be, right? And so I believe that by pricing Bitcoin in terms of gold, not only does it give a very compelling argument for this upcoming year, but for the decade to come, I think it's something very, very exciting. So I'm going to go through the math here of how we get to a $3.6 million Bitcoin in about 2035 or so, given two assumptions. Not that I think I'm predicting that and saying that's going to happen, but given two assumptions, we could be looking at a $3 to $4 million Bitcoin within 10 years. 5 years ago, with the COVID crash, where Bitcoin fell from 8,000 down to $3,000 or $4,000 or so, 5 years before that, it was 2015. Bitcoin was way, way, way lower than it was even in 2020, and 2020 it was way lower than it is now. So without further ado, let's get into the math here of the two assumptions I have that give us that. Real quick, if you don't mind subscribing, I really appreciate that. Sorry to ask, but most of you watching are not subscribed, and I'd really appreciate if you are subscribed, because if you don't subscribe, YouTube won't push this video, and instead it will push the videos out there where the people doing all the trading and altcoin stuff that pay for subscribers, that pay for likes, that pay for engagement. I don't pay for engagement, I don't pay for likes, so that's a bit of a disadvantage for the Bitcoin maxis like myself. But if you don't mind, please subscribe, like the video, do all that wonderful stuff so that we can drown out all the altcoin and trading and degenerate folks that unfortunately buy engagement so that the algorithm will promote their stuff. It's just how it works, unfortunately. But let's get back into the assumptions here. So I made two assumptions with everything we've been looking at, right? We were looking at Jesse Meyer's chart of Bitcoin price in terms of gold, and we were looking at the global asset allocation chart, many of which of you you have probably seen. Here are the assumptions. Assumption number one is that gold appreciates at 15% in nominal terms over the course of the next 10 years. Okay, some years gold is going to have a great year, like it did into this last year, where it returned 50%. And other years, it's going to be down 10, 20, maybe even more than 20%, right? But the first assumption is that the gold market cap increases by 15% a year. This makes a lot of sense to me, because when we look in the past, here we're looking at about, what would that be? About 12 years ago in 2013, right? You have gold here in this darkened yellow, golden color area, right? And then you have Bitcoin, this very, very tiny green sliver at the bottom, right? Gold is literally worth hundreds, if not thousands of times more than Bitcoin. But over the course of time, the gold market cap grows very steadily. Between 2013 and all the way out to today, we're looking at a gold market cap well over double of what it is now. And this is including the fact that we've mined a lot more gold, about 3,600 tons a year over the last decade or so, right? We're looking at tens of thousands of tons of more gold now than we were a decade and a half ago, and yet the market cap of gold is still not double where it is today. So that's the first assumption we're taking, that money printing is going to continue, that these Trump tariffs are not going to solve the problem, merely kick the can down the road. We're going to have more money printing, and gold will adjust upwards for that fact. 15% compound annual growth rate, I think, is a very safe, very reasonable assumption, especially given that I think there's going to be more inflation, more money printing in the next 10 years than the previous 10 years, and gold still doubled in that 10-year period in the last one, right? So that's the first assumption. The market cap of gold increases 15% a year. Assumption number two, Bitcoin takes a decade to hit gold parity, not surpass gold, not to 10x gold, but to hit gold parity. This is something that I think is very difficult for Bitcoiners to accept. A lot of people in Bitcoin want the green vertical candles right now. They don't want to wait. I get it. Life goes by. Time is the currency that we are forced to spend. We cannot unspend time. We cannot slow the rate of spending time. Bitcoin, dollars, houses, gold, every other form of currency, you can manipulate how much you're spending, but time, you have to spend it. And so we all would rather have number go up sooner than later. We all would rather have a 10x this year, but I think it's the truth that probably, if we're honest with ourselves, technological transformation, paradigm shifting, world shifting technology takes time to happen. You can't have something be world changing and it happen at the same moment. I mean, you can, but it's just not very likely, right? The internet, the smartphone, took decades to be adopted in our world. That was the fastest adopted technology on the planet, right? Still, 40% of the world's adults don't use the internet. A major portion of the world's adults don't even have a smartphone, right? So my point is, to a similar degree, yes, Bitcoin already is 15 years old, sure, but we have to be prepared that very possibly Bitcoin could take at least another decade to meet gold parity. And again, I think that should make you bullish. I think that should make you optimistic, right? Look at how small gold is on the market caps of the world, right? Look at how low ranking it is. Okay. It is literally the smallest ranking asset other than Bitcoin on this entire chart. And oh, Luke's a bear because he's saying it's going to take 10 years to meet gold. No, I don't think that's bearish. I think that's realistic. Maybe it takes less than 10 years, right? Maybe it takes 8 years or 5 years. I don't think it's going to take 1 year or 2 years. Maybe I'm wrong. And if I'm wrong, that's okay. I'm well positioned for it. Better than most people out there in Bitcoin, frankly, right? Just because I don't think it's going to happen doesn't mean that you shouldn't prepare for it, because once it happens, it won't ever happen again. And maybe it takes longer than 10 years, right? Maybe I'm too optimistic, and instead we're looking at the late 2030s instead of early 2030s. But here's the larger point I'm trying to make. If we assume gold only appreciates at 15% over the next 10 years, which given the history of the gold market cap, I think is very realistic, and assuming that you want to assume, just like previous fast adopted technologies like the smartphone and the internet, it still takes a while. Looking at 10 years, that is still a $3.6 million Bitcoin. How? Because Bitcoin is eating gold faster than gold is eating the rest of the world, right? Gold is getting a larger and larger share of the rest of the world's assets. I believe that. I believe we're going to have less and less money in bonds and equities and more money in gold. And likewise, Bitcoin is eating gold. You have the second best money in the world eating a larger share of the pie, and you have the best money of the world eating a larger share of that slice of the pie that gold is growing. And that is really incredible to me, right? A lot of people say, oh, Bitcoin, when it's $5 million, a burger is going to be $500, or, oh, it's stupid to say Bitcoin's going to be $10 million because a house is going to be $10 million, or whatever, right? But if you actually zoom out and you look at it in that context, that doesn't seem that absurd. Those are two very moderate assumptions. Assumption number one, gold appreciates 15% a year, not 50% a year like it did in this last year, just 15% a year. And Bitcoin eats that share of gold. That's a multi-million-dollar Bitcoin. If that were to happen 10 years from now, we could be looking at a daily Bitcoin candle of $144,000, a price almost double the current Bitcoin price. That sounds insane. That sounds absurd. Oh my goodness, Bitcoin is dead. I knew it. When Bitcoin surpassed the gold market cap, I knew that was the top. I should have sold, blah, blah, blah. Bitcoin's down $200,000 this morning. It's so over. I mean, that's probably exactly what's going to happen. Bitcoin literally is 85,000 times more valuable than it was when it was $1. Like, what's to stop it from being 50 to 100 times more valuable than now and losing more money in a day, more market cap in a day than what the entire market is worth now? Like, I think that's very, very likely that if it just keeps growing, not hyper Bitcoinization, not globally adopted as a medium of exchange, probably still less than a third of a billion or a quarter of a billion users using Bitcoin, right? Let's say 10 years from now, the number of users increases by a factor of 100. Okay, great. Maybe we go from 5 million users today to 300 to 500 million users 10 years from now. Like, that's a multi-million-dollar Bitcoin. We're going to be looking at daily price swings of hundreds of thousands of dollars, right? A 4% move on a $3.6 million Bitcoin is a daily red candle of nearly $150,000. And so this is my point. A lot of people are curious that, oh my goodness, what's going to happen with Bitcoin this cycle? Is the cycle dead? Look at all the volatility in the last couple of days. We were firmly above 100K, and now we're falling back below again. Well, guess what? Again, if you zoom out in gold, yeah, I think it's totally possible Bitcoin could go up $150,000 this year. If Bitcoin goes up $150,000, that's a $230,000 Bitcoin this year. That's totally possible. Should you bet on it? Should you bank on it? No, probably not. But you should bank on Bitcoin in the long term, because even if Bitcoin doesn't go up or down $150,000 over the course of the next couple of years, probably within a decade, if not in a decade, it's going to go up and down a couple $100,000 every single day. That's the kind of time horizon you need to be looking at. Bitcoin is worth way more than gold. and getting exceedingly bullish beyond everything I've said so far in this video, this is the big deal. Everything we've been saying is only assuming a 15% compound annual growth rate for Bitcoin, and only assuming Bitcoin is worth equivalent of gold. It's not worth equivalent of gold. Bitcoin is worth way more than gold. Bitcoin doesn't deserve to have the same size on this chart as gold. It deserves to have a size way larger than anything else on this chart, right? Jesse Myers made this chart, and he gives Bitcoin's total addressable market as an example number of $225 trillion, which is about a 100x from today. If you keep in mind that over the course of the next couple of decades, we're going to at least double the prices of everything else on the planet, then we're looking at a $500 quadrillion total addressable market cap for Bitcoin, assuming it only remains in that small box on the right-hand side. I think it should be even way larger. We're not looking at a 225 trillion, quarter of a quadrillion asset. We're not even at that point looking at a $500 quadrillion asset. We're looking at a quadrillion dollar asset of Bitcoin. I think that is totally realistic if you give it a few decades and you give it enough time. Gold is eating the world, and Bitcoin is eating gold. So there's something I would encourage you to join if you want to meet with fellow Bitcoiners. Just to pivot a little bit, there's an event in Prague coming up. If you want to meet with fellow like-minded Bitcoiners and gold bugs, would strongly encourage you to come out. It's June 1921. It's one of the best conferences in all of Bitcoin, in my opinion. There's a retreat either right before or right after, costs a couple $1,000s, depending on where you're flying from, depending on what kind of room you want, right? You'll get VIP discount to the conference. Give this phone number a text if you want to join. These are some pictures of where we'll be staying. An absolutely beautiful place, 3-story penthouse, beautiful, beautiful place. You'll be able to hang out, chat with Bitcoiners, and we could talk about the exciting future ahead for us and get to know each other. You can talk about all kinds of things and ultimately make friends, because I don't think we're going to have any shortage of volatile days to the upside and the downside. And I don't think we're going to have any shortage of dollars at our disposal as Bitcoin is worth more and more dollars. What is going to be unique, what is going to be memorable, what is going to be scarce are these kinds of experiences with fellow Bitcoiners in some of the most beautiful cities in the world, hanging out with some of the most legendary Bitcoiners in the world, right? If you get the chance to meet Michael Saylor, to meet Adam Beck, to meet Jimmy Song, or whomever else you would like to meet, Jack Mallers, etc., this is the place to do it. This is the conference to do it. And this little retreat hopefully gives the time and the space to spend time with fellow Bitcoiners and make good friends. One last thing I want to shout out at the very end of the video for those of you that were watching the entire time. Really appreciate it. Appreciate your support. If you're watching still now at the end of the video and you haven't subscribed, please consider doing it, because like I said, it really helps the algorithm. I don't care how many subscribers I have. I was making videos when I had 80 subscribers, and now I'm making videos with however many subscribers I have now. So I don't care about the numbers, but it does really help the algorithm push the Bitcoin only message out to everyone else, right? Especially since Bitcoiners don't buy engagement, or at least I don't buy engagement. So a little reward for those of you watching at the end of the video here for your patience and enjoying this content. This world I really believe is coming, where Bitcoin becomes a larger and larger asset class. And a part of this world is that more and more financial products are going to be made available to people, especially all of you watching, because presumably you all have way more Bitcoin than the average person they're ever going to have, right? We have less in common with the future and the past. Most Bitcoin loans right now are asking for 12 to 17% interest. Okay, and this is very difficult to compete with. With the house, you can get 5 to 8% loan, right? With a car or with a student loan, with different kinds of subsidized loans, you can get interest way lower than 12 to 17%. And so most people in Bitcoin aren't even considering having loans or loan products with their Bitcoin. I really believe that is about to change. Not in the course of years, not even in the course of months. I believe we're within a month, maybe a couple months, of seeing really incredible products brought to market and promoted that are going to be really, really enticing. That's not to say that's necessarily a good thing. It's going to be really competitive. I think it's going to be really overwhelming. And this is something I'm sharing now. I can't say much more now, but if you are somebody that wants to borrow Bitcoin below 10%, let me know, because I'm happy to have a conversation. The last thing I want is for a loan product to come out and you ape in too heavy. And on the flip side, the thing that I do want is for you to be the front of the line to be able to have access to those kinds of products. So if you want to be able to borrow Bitcoin for half of the interest rate, half of the interest rate, let's say even 8%. I really think these kinds of things are coming down the line quickly. I can't say anything more about it, but if you want to learn more about what is the technology that makes these things possible, it's called multisig. Multisig basically means you have different keys and different sets of hands at different jurisdictions. And with certain kinds of multisig, because they are lower risk self-custody setups, there's going to be way, way, way better, more favorable terms for borrowers. Right now, like one of the most high risk, high interest loans you can take is Bitcoin, right? 12 to 17% direct tangible cost with the interest plus the risk, right? Probably you have a margin call level with that loan. Probably you don't hold your own keys. What I'm saying here is that there are probably things coming down the line sooner than later where you're going to be able to have your own keys or where you're going to be able to pay lower interest. Why? Because there is less risk with the custody setup. This is why I've been pounding the table on multi-sig vaults for literally years now. Because when the free market understands that instead of giving up your keys to some centralized holder of those keys to then demand a 12 to 17% interest rate, you can have a cheaper loan, better for the lender because there's less risk, better for the borrower because there's less risk. I mean, that I think is going to be a major contributing factor to what causes Bitcoin to do so well, right? We have literally not seen this before in any previous cycle, right? Everyone's speculating on if Trump is going to eliminate capital gains tax on Bitcoin. I'm very skeptical of that personally, but this is a really big deal. So if you have any interest in learning more about those things and being able to talk to the providers that are about to bring this to market, feel free to reach out to me, give me a text, let me know that's what your specific interest is, and happy to have a conversation and discuss what your goals are and discuss maybe potentially having something along that line happening. But the big deal is I'm not encouraging this. I'm not saying it's announced yet. I can't say any more details about it. But what I am saying is that there are very exciting things coming down the pipeline very soon. And I think ultimately this is all a very, very positive catalyst. So if you want to consider joining us in Prague in June, feel free to reach out. It's going to be a really wonderful experience, something I think is going to install a lot of FOMO in the future. And likewise, if you're somebody that wants to learn more about these kinds of products, especially if you're somebody with, let's say, over, whatever, let's say something over 20 Bitcoin or so, I think this is the kind of product that is going to really, really entice you. It's something that is just not been seen yet in the market, and it's the kind of thing that's going to help take Bitcoin from a $2 trillion asset to eventually a multi-deca trillion dollar asset. So thank you everyone for your time. 118.